Welcome to Options and Ideas topic Government Scheme Loan. As of my last knowledge update in September 2021, there were several government schemes in India that provided loans to various sectors and categories. However, please note that the availability and terms of these schemes may have changed since then. It's important to verify the information with official government sources or financial institutions before making any decisions. Here are some notable government loan schemes that were available in India. 1. Pradhan Mantri Mudra Yojana, PMMY. Pradhan Mantri Mudra Yojana, PMMY, is a flagship scheme of Government of India. The scheme facilitates microcredit loan UP to Rs. 10 lakh to income-generating micro-enterprises engaged in the non-farm sector in manufacturing, processing, trading or service sector. Mudra supports financial intermediaries to extend loans to the non-corporate, non-farm sector income-generating activities of micro and small entities. These micro and small entities comprises of millions of proprietorship, partnership firms running as small manufacturing units, service sector units, shopkeepers, fruits, vegetable vendors, truck operators, food service units, repair shops, machine operators, small industries, artisans, food processors and others. In rural and urban, the loans under Mudra scheme can be and lending institution availed only through BA and KSS, which include public sector banks, private sector banks, state-operated cooperative banks, rural banks from regional sector institutions offering microfinance, financial companies other than banks. Interest rates are charged as per the policy decision of the bank. However, the interest rate charged to ultimate borrowers shall be reasonable. Upfront fee, processing charges. Banks may consider charging of upfront fee as per their internal guidelines. The upfront fee, processing charges for Shishu loans, covering loans up to Rs. 50,000, are waived by most banks. Benefits. The benefits under the scheme has been classified under three categories as Shishu, Kishore, and Tarun, to signify the stage of growth, development and funding needs of the beneficiary micro-unit, entrepreneur. Shishu, covering loans UP to Rs. 50,000, Kishore, covering loans from Rs. 50,001 to Rs. 500,000, Tarun, covering loans from Rs. 500,001 to Rs. 1 million. 2. Stand UP India Scheme. Stand UP India was launched by the Government of India on the 5th of April 2016 to support entrepreneurship among women and SC and Saint communities. Stand UP India Loan Scheme is a government initiative launched by the Government of India in 2016 to promote entrepreneurship and facilitate bank loans to scheduled caste, SC, scheduled tribe, ST, and women entrepreneurs in the country. The scheme aims to provide loans between 10 lakh rupees and 1 crore rupees for setting UP a greenfield enterprise in manufacturing, trading or services sector. 1. It is similar to but distinct from Startup India. Both are enabler and beneficiary of other key Government of India schemes, such as Make in India, Industrial Corridor, Dedicated Freight Corridor, Sagarmala, Bharatmala, Udan RCS, Digital India, BharatNet and Umang. The scheme offers bank loans of between 10 lakh rupees, 13,000 United States dollars, and 1 crore rupees, 130,000 United States dollars, for scheduled castes and scheduled tribes and women setting UP new enterprises outside of the farm sector. 3. Pradhan Mantri Employment Generation Program, PMEGP. Government of India has approved the introduction of a new credit-linked subsidy program called Prime Minister's Employment Generation Program, PMEGP, by merging the two schemes that were in operation till the 31st of March 2008, namely Prime Minister's Rojgar Yojana, PMRY, and Rural Employment Generation Program, REGP, for generation of employment opportunities through establishment of micro-enterprises in rural as well as urban areas. PMEGP is a central sector scheme administered by the Ministry of Micro, Small and Medium Enterprises, MOMSME. At the national level, the scheme is being implemented by Khadi and Village Industries Commission, KVIC, a statutory organization under the administrative control of the Ministry of MSME as the single nodal agency. At the state level, the scheme will be implemented through state KVIC directorates, state Khadi and Village Ind USTRIES boards, KVIBS, and district industries centers, DICs, and banks. The government subsidy under the scheme will be routed by KVIC through the identified banks for eventual distribution to the beneficiaries, entrepreneurs in their bank accounts. Objectives: to generate continuous and sustainable employment opportunities in rural and urban areas of the country, to provide continuous and sustainable employment to a large segment of traditional and prospective artisans, rural and urban unemployed youth in the country through setting up of micro-enterprises. To facilitate participation of financial institutions for higher credit flow to micro-sector. Eligibility: individuals above 18 years of age. 8 STD. Pass required for project above 10 rupees, 00 lakhs, in manufacturing, and above Rs. 500 lakhs, for service sector, self-help groups, and charitable trusts. Institutions registered under Societies Registration ACT 1860. Production-based cooperative societies. 4. Credit-linked capital subsidy scheme for technology UPGRADATION, CLCSS. The objective of the scheme is to facilitate technology UP gradation in MSES by providing an upfront capital subsidy of 15% on institutional finance of up to 1 crore rupees availed by them for induction of well-established and improved technology in the specified 51 sub-sectors, products approved. In other words, the major objective is to upgrade their plant and machinery with state-of-the-art technology, with OR without expansion, and also for new MSES which have set up their facilities with appropriate eligible and proven technology duly approved under scheme guidelines. List of technologies is available at www.dcmsme. Governor in the scheme is a demand-driven one without any upper limit on overall annual spending on the subsidy disbursal. WHO can be benefited, micro and small enterprises, MSES, having a valid UAM number. 5. Stand UP India Scheme. Stand UP India was launched by the Government of India on the 5th of April 2016 to support entrepreneurship among women and SC and Saint communities. Stand UP India Loan Scheme is a government initiative launched by the Government of India in 2016 to promote entrepreneurship and facilitate bank loans to scheduled caste, SC, scheduled tribe, ST, and women entrepreneurs in the country. The scheme aims to provide loans between 10 lakh rupees and 1 crore rupees for setting up a greenfield enterprise in manufacturing, trading or services sector. The scheme offers bank loans of between 10 lakh rupees, 13,000 United States dollars, and 1 crore rupees, 130,000 United States dollars, for scheduled castes and scheduled tribes and women setting up new enterprises outside of the farm sector. Six. Credit Guarantee Fund Scheme for Micro and Small Enterprises, CGTMSE. Under CGTMSE, guarantee cover is provided by the Trust for the credit facilities to an extent of 200 lakh rupees that have been sanctioned without any collateral security and or third-party guarantees to all new and existing micro and small enterprises, both MFG as well as services, except educational and training. Benefits: CGTMSE enables MSMEs to get loans from banks and financial institutions without any collateral. This improves their access to finance. The credit guarantee cover provided by CGTMSE reduces the risk of lending for banks and financial institutions. This encourages them to lend more to MSMEs. 7. National Bank for Agriculture and Rural Development, NABARD. Schemes. National Bank for Agriculture and Rural Development, NABARD, is an apex regulatory body for overall regulation of regional rural banks and apex cooperative banks in India. It is under the jurisdiction of Ministry of Finance, Government of India. 4. The bank has been entrusted with matters concerning policy, planning, and operations in the field of credit for agriculture and other economic activities in rural areas in India. NABARD is active in developing and implementing FINANCIANABARD was established on the recommendations of BSIVARAMMAN Committee by ACT 61, 1981 of Parliament on the 12th of July 1982 to implement the National Bank for Agriculture and Rural Development ACT 1981. It replaced the Agricultural Credit Department ACD and Rural Planning and Credit Cell RPCC of Reserve Bank of India and Agricultural Refinance and Development Corporation, ARDC. It is one of the premier agencies providing 14,080 crore rupees, 100% share. The authorized share capital is 30,000 rupees crore inclusion. International associates of NABARD include World Bank affiliated organizations and global developmental agencies working in the field of agriculture and rural development. These organizations help NABARD by advising and giving monetary aid for the upliftment of the people in the rural areas and optimizing the agricultural process. NA Foundation has been set UP by NABARD as a Section 8 OR subsidiary company, where the chairman of NABARD is the chairman of NA Foundation too. NABARD is a development bank with a mandate for providing and regulating credit for the development of agriculture, small-scale industries, cottage and village industries, handicrafts and other allied economic activities in rural areas to promote prosperity of rural areas. The primary objective of NABARD is to promote sustainable and equitable agriculture and rural development through institutional development, credit support, and other related services. GOFT, Sponsored Schemes Farm Sector, Dairy Entrepreneurship Development Scheme, Capital Investment Subsidy Scheme for Commercial Production Units for Organic, Biological Inputs. Agriclinic and Agribusiness Center Scheme. Credit Linked Capital Subsidy Scheme. NRLM, NUL, Deen Dayal Antyodaya Yojana, Weavers Package. 8. Startup India. Startup India is a scheme of the Government of India. It was announced by Prime Minister Narendra Modi during his speech on the 15th of August 2015. STARTUP India campaign, boost startup talent in India by providing tax exemptions with the condition. These benefits are available to new startups only. Existing businesses for more than 10 years cannot claim this benefit. According to the Startup India plan, all eligible entities under this scheme will get 3 consecutive years tax holiday on profits earned. Eligibility is a private limited liability partnership firm or partnership firm. Have not completed 10 years since incorporation or registration. Annual turnover is not more than 100 crore for any financial year. Is not formed by merger, splitting or reconstructing business already in existence. Entity working towards innovation, research and development and improvement of products and services generating employment in India. Registration companies must first incorporate or register the business as limited liability partnership or private limited company. Post-incorporation registration, visit the Startup India website. Fill the form with details of the business. Enter the one-time password which is sent to your email and other details like a startup the type of user, name and stage of the startup, etc. After entering these details, the Startup India profile is created. What is Startup India objectives? Startup India Scheme, a government initiative. Benefits. Startup India Scheme is an initiative by the Government of India for generation of employment and wealth creation. The goal of Startup India is the development and innovation of products and services and increasing the employment rate in India. 9. Atal Pension Yojana, APY. As a part of the scheme, people can make contributions in their Atal Pension Yojana account till the age of 60 years and get a monthly pension. This is a beneficial, since it provides people with an assured minimum pension sum to meet their expenses after they turn 60 years of age. Atal Pension Yojana, APY, a pension scheme for citizens of India, is focused on the unorganized sector workers. Under the APY, guaranteed minimum pension of Rs. 1,000, or 2,000, or 3,000, or 4,000, or 5,000 per month will be given at the age of 60 years depending on the contributions by the subscribers. What are the benefits of Atal Pension Scheme? 10. Pradhan Mantri Awas Yojana, PMAY. Pradhan Mantri Awas Yojana, PMAY, was launched with the aim to provide housing at an affordable price to the weaker sections of the society, lower income group people, urban poor, and rural poor. The Yojana involves the construction of around 20 million houses at an affordable price. GOI will provide 6.5% interest subsidy to eligible home loan borrower for 20 years or loan tenure whichever is earlier. The NPV of subsidy amount calculated at 9.00% discount will be provided upfront after disbursement of loan. What is PMAYSCHBESIDES? The EWS and LIG groups, the eligibility of Pradhan Mantri Awas Yojana, PMAY, extends to the middle-class families, MIG-I and MIG-2A as well. The applicant must have an annual income between 6 rupees to 12 rupees lakh, MIGI, and between Rs. 12-18 lakh rupees. 11. National Minorities Development and Finance Corporation, NMDFC, loan schemes. Under this scheme, loan is available for job-oriented, technical and professional courses, of durations not exceeding 5 years. Loan of up to Rs. 20 lakhs for domestic courses and Rs. 30 lakhs for courses abroad under Credit Line 1 and Credit Line -2 is extended to beneficiaries at 3% PA and 8% PA respectively. Eligibility criteria: applicant age should be between 18 to 55 years. Applicant should not be defaulter of KMDCLOANS will be provided only on mortgage of property, BUILDING, land, to the corporation. The value of the property should not be less than the loan amount. 12. Pradhan Mantri Rozgar Yojana, PMRY. PMRY is a scheme that has been designed to come UP and provide sustainable self-employment opportunities. It is for 1 million educated and unemployed youth in India. Preference is given to weaker sections, and it also includes women. The scheme covers 22.5% reservation for SC, Saint and 27% for OBC. Eligibility criteria for PMRY age: the applicant should be between 18 and 35 years of age. There is a relaxation of 10 years for SC, Saint candidates, women, ex-servicemen, and physically challenged individuals i.e. UP to the age PF 45 years. 2 lakh, and Rs. 5 lakhs for the business, service, and industry sector respectively. Collateral-free loans of UP to Rs. 1 lakh are available under the scheme. 13. Agricultural Credit Schemes. Government of India was launched in the year 2006-07 with a view to provide short-term agri-loans availed by farmers through KCC for their working capital requirements at concessional rate of interest. Under this scheme, farmers are given KCC loan at SUBVENTED interest rate of 7% per annum for loans unto 3 lakh rupees. When it comes to credit in the field of agriculture, all other banks throughout the country fall under the purview of the NABARD. The sources of agricultural finance in India are broadly classified as institutional and non-institutional sources. Institutional sources are related to institutions such as cooperatives, regional rural banks, RRBS, or scheduled commercial banks, SCBS. Thank you.
Thanks for watching the video. Our address is Options and Ideas, 28L, Jheel Road, flat number 1A, ground floor, Kolkata, pin code 700031. West Bengal. Website www.optionsandideas.com and optionsandideas.org. Contact 9330036513.